The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the March 7th, the terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. The easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I want you to know I'm absolutely grateful for your presence here. But even more important than that, and that's this, during this next 53 minutes, I'm here to serve you. So feel free to pick up that phone. Would love to hear from you. 877-927-6648. That's the number you call in on. Now, if you've got a question but you can't call in, you can always send me an email. Send that off to Steve at TFNN.com. And inside the subject heading, please put radio show question. Of course, if you're inside our Tigers den, well, then any and every ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. A sea of red out there. All the U.S. indices, all the sectors inside the S&P 500, nearly everything on my screen, but not everything. U.S. dollar index up 925 ticks. That's at a 10-minute delay on it, so it's not going to be exactly accurate. You've got the spot volatility up 34 cents, but still well below its 50-day exponential moving average. Natural gas up 4 cents, and the 30-year Treasury up 14 ticks, trading at 124.1. Otherwise, everything else pretty much the downside. Oh, I take that back, guys. See, Facebook or Meta is up $1.50. So the Dow's off 255, S&P 35, NASDAQ 176, Russell's down 10, gold is off 31, and silver's off 41 cents, and light sweet crude back $1.65. Let's try to figure out what all this means out there. To do that, we're going to switch panels. We're going to go take a look at our 8-panel multi-time frame set of charts out here. Those would be the white background charts. They'll be up on your screen here momentarily. In the upper left-hand corner, we've got the daily time frame chart. So we're off about 0.7%, down 86 points right now. What we do know with certainty, first price has been consolidated with inside its profile. 11,975 at the bottom, 12,409 at the top. We also know that that green oscillator and change line has really acted as resistance. That big rally on Friday, boom, stopped right there. Yesterday, coming into the close, boom, stopped right there. This morning, the open right there on that oscillator and change line, it's pretty lower. So if price is below green oscillator and change line tells us about a potential retracement, a further retracement. We get those signals by taking a look as far as retracement to where. Is it going to be a further retracement? Are there any kind of bottoming signals? We get that by looking at the other time frames. Well, here's a 5-hour chart. 5-hour time frame chart has a TD9 count top. It has a sell the D point top as well. And now price is pulled back to test support. So on this 5-hour chart, this bar does not complete till 2 p.m. Support has held so far, and support is 12,232. On the 4-hour time frame chart, TD9 count top and support is held. That's the bottom of its profile. That's at 12,232. So we know that that 12,232 area is a very important level. Why? If that gives way, price should then target 12,019. Prices below the profile levels for the 120-minute time frame chart, its next area of support would be down at 12,019. That's at TD9 count breakout level. On a 60-minute time frame chart, I can see an A to B equals CD pattern to the downside. If you can't see that, I'll just draw in the A to B point out here. So here's A to B, and all we have to do is just move that line over to where the C point begins. That's right up there. So we can see that we've made the one-to-one price objective. Now, what that pattern needs is a bullish reversal candle to confirm a Gartley buy pattern. So be on the lookout for that. On a 60-minute time frame, we've got 50 minutes left in this session, so it's very doable for this to at least get a dark cloud cover candle. It just has to finish about halfway into the prior bar's body out there. On a 30-minute time frame chart, not really assisting us, nor is the 15, nor is the 10, at least not that I see at the moment out here. So we'll just leave it to those other 5 charts. And we'll watch that support level, that 12,232. If that gives way, expect 12,019. What else can I share with you on the NQ? Well, I know what I can share with you about the NQ and the ES Mini, and that is, let's go take a look at the market breadth tools. So on a market breadth standpoint, this is the S&P 500, only 37 above, 272 below. That's for a 30-minute time frame. In the case of the NDX 100, we're going to see a choppy market out here, I'm pretty sure. In the case of the NDX 100, the NQ, that is, we've got 5 above, 51 below. So definitely short-term bearish from a market breadth standpoint. Now, that's the 30-minute chart. Let's go see if we get the other 4 time frames to confirm what the 30-minute chart is seeing, which is negative TAS market profile. Bearishness. In the case of the NASDAQ 100, it's bearish for all time frames. I take that back. Take a breath, Stevie. 4-hour and 60-minute chart, 4-hour and 1-hour chart are bearish, but the daily and the weekly are bullish. So that is definitely a sign of a choppy market. That's what we've got. We know that we've seen the NQ consolidate with inside its profile. So all of that makes sense. If we take a look at the S&P 500, it is bullish for its 4-hour and daily time frame. Slightly bearish on the weekly and certainly bearish on the 60 minutes. So let's focus in on the 60-minute charts out here, see if there's any kind of signals. Well, we've got those A to B equals CD patterns. You know what we can do here? Let's just open up all of the 60-minute time frame charts, see if we've got a similar set of patterns out there. So if you give me a moment here, we'll pull up, should be able to pull up, here we go, all 4 of the equity future contract. We already took care of the NQ and its A to B equals CD to the downside pattern. Again, awaiting for a bullish reversal candle to confirm a buy the D point pattern. I really see that same exact pattern here inside the ES Mini, although this is more than a 1-to-1 A to B equals CD. This says on a 60-minute basis, if price does not bottom here, its target will be 39.7550, its breakout level. The other target for the NQ, maybe I didn't mention that before, 12.023. That would be a level if this low doesn't hold here, based upon those profiles in that 2-hour and 4-hour time frame chart that we looked at. The Dow. No, we didn't look at their 2-hour and 4-hour time frame, and maybe 4 and 5-hour time frame charts out here. But let's just say at this stage here, based upon, I really do believe it's about the NQ. If the NQ can hold, the rest of the markets can hold. If the NQ gives way, so too will the rest of the markets. In the case of the Dow, its next downside target on an hourly basis would be down at 32,954. And in the case of the Russell 2000, it's got a Rhodes Mintum and wave number 7 top. That's what it did at 9 o'clock this morning. So that wave 7 top, I'll pull this down just a tad. You'll be able to see that as part of the Chapman wave, a very small part. Now, this could actually be forming an A to B equals CD to the downside out here. So we'll have to, but again, I believe that all of our P's and Q's should be taken from the NQ. But that being said, a lot of people are trading the ES Mini, so let's go take a look at its intraday charts out here as well, just to fully cover it. We covered the market breadth aspect of it, but we haven't covered any of the support levels as to where price might be trading into. So let's go take a look at that. Now, on the daily time frame, price was above the top of its daily profile yesterday and today, but Jerome wanted to throw a pity party, and now it's back below the top of its profile. What that signals to you and I is price may be targeting its bullish profile support area. And that's between the bullish structured support area. That's between 39.57 and 39.90. The case of the 5-hour time frame chart for the ES Mini, it is trading below profile support. Same with the 4-hour. Again, I come back to it's all about the NQ. However, on a 30-minute basis, I see a TD9 count bottom for the ES Mini. Now that's cool because that's going to give you a real important key threshold level. So when we come back from this break, we'll go take a look at that for the ES Mini. We'll go see if there's any other 30-minute TD9s out there as well. We'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's off 300, S&P 40, NASDAQ 93. We're taking a look at the 30-minute charts for the U.S. equity future contract. We had noticed in looking at the ES Mini set of charts out there that the 30-minute did have a TD9 count bottom. Now, that was in effect as of 11 a.m., and the key level of price, that price must continue to close above, otherwise the pattern gets negated, is 40.10.25. We're trading right now at 40.11. So now this is going to be important as we come into 11:30. If we get it closed below 40.10.25, the signal is that the ES Mini is on a strong momentum move to the downside on this 30-minute time frame. Where would be the next price target on a 30-minute basis? I've got to give me a moment here to add a couple more lines, and I'll give you that exact number. No reason for me to try to figure that out. Let's just get over here. Let's add this to 0. Give me a moment, if you would. And so the next area of potential support, if that level holds, will be down to 39.93.25. So write that on your pad of paper. Now, what should take place here, when you form a TD9 count bottom or top, price should then target its oscillator and change line. In this case here, it's right around 40.40, and that number is going to change up and down if we get a rally up there. But that would be the target. Maria says that we really need the Russell 2000 to show us the way. Well, Maria, you're in luck here. It's going to show us the way either to the upside or to the downside. It's also formed a TD9 count bottom. It's attempting to form a Rhodes Momentum Indicator bottom. We don't need 2. We just need 1. So its key level of support, its threshold level of support is 1885.70. So it'll show us a way to the downside if price closes below that level on a 30-minute basis. Otherwise, price should target its oscillator and change line, 1897. I have no idea whether price can take that price oscillator out on a rally. I just know that that should be the price target. And again, if these levels fail, they tell us about a strong momentum move to the downside. Where would be the next price target for the ES Mini? Let's pull this chart in, see if we can figure that out. Well, that'd be pretty simple. That would get us all the way back into the swing point for about 10 o'clock in the morning back on March the 2nd. And that's anywhere between the area of 1876 up to 1887. We're already testing that swing point. We're trading in it right now. So a rejection would be, and that's at the 11:30 hour, a rejection of that swing point Maria, would be a close above 1886.80. We're at 1888 right now. So TD9 count bottom, price should go target that oscillator and change line. If it can get above that, it'll go target the next area of resistance. That's going to be the bottom of its profile at 1905. So if you think it's all about the Russell 2000, well, you've got your signals out here on a 30-minute basis to give you further information. So that's it. I don't see any other bottom patterns, that is, on the Dow or the NQ out there. So that's what we have going on. Let's get to some of our questions that have come in. The first was to take a look at TLT. That was from Dan inside the Tiger's Den. And we are going to take a look at TLT, but not before we take a stop looking at the 30-year Treasury charts out here. So here's what we've got. On a monthly time frame, we have a buy the D point pattern. That pattern confirmed all the way back here in November of 2022. When you form a bottom pattern, whether it's a buy the D point, whether it's a TD9 count, whether it's Rhodes Momentum Indicator pattern, price should always go target that oscillator and change line. That's exactly what happened. That took place last month. That was a test and rejection. So we're kind of in neutral territory, neutral to bearish territory, although we have a consolidation with inside its profile. So let's just call it a consolidation after a confirmed bottom. On a weekly basis, price is below profile, but it still keeps holding that red oscillator and change line. So it's not a bearish signal out there. And on a daily time frame, what do we have on a daily time frame? I would have to say not much other than price trading with inside its profile. Now, I've got two different sets of profiles. I prefer to use the ones that are on the black background charts out there. So let me give you those. And those, the reason I prefer to use those, one, I think they're more accurate because I'm using a special tool there. Also, because I know yesterday and the day before's move, or I'm sorry, yesterday and this morning's move, both have been tests and rejections of the top of that profile. Now, I'm not showing it here, but please write this on your pad of paper. That's 125.25. And for support, you're at 123.27. So all that I see out here on the 30-year, I see a consolidation on the monthly. I see a sideways consolidation on the weekly. I see a consolidation within profiles on the daily. Of course, we have bottom patterns on the monthly and the weekly and the daily time frame out there. So now we get back to the intraday charts. So from an intraday standpoint, Dan, to the upside, the TLT, if it can close above, let me give you this number. This is the 4-hour TD9 count threshold area. That's its high. That's going to be up at the 125.28 area. If price closes above that, the 30-year Treasury should continue to move higher. Remember, 125.25 also is that daily top of its profile out there. So close above that, a close above this TD9 count on the 4-hour time frame tells you we move higher. What about to the downside? Where can we go to the downside? Well, to the downside, I'd go back to the bottom of that daily profile, and that's at 123.27. Okay, so we got the 30-year Treasury, which is basically saying what to us? Well, we know what it said to us. We gave a figure to the upside where price has to close above to tell us it wants to rally, and we know where the downside support level is. So now let's go take a look at the actual TLT, see what kind of messages it provides to us. So as we pull open the TLT charts on a daily time frame, what we see here, well, one, we see an island bottom. So that took place. That island bottom was formed between March 1st and March 2nd. Island bottom is about the most bullish pattern that you could find. Now, we didn't see an island bottom pattern on the 30-year Treasury. So we prefer the underlying instrument. That's what we took a look at versus the ETF, such as TLT. What we do see with inside TLT is a consolidation with inside its daily profile. And Dan, that range is between 100.36 as support at the bottom and 102.22 as resistance at the top. Remember the weekly chart for the 30-year Treasury kept testing and holding its oscillator and change line, so too for the TLT. Price here is below the bottom of its profile, but just really more of a sideways consolidation than any other pattern that I see out here. And on the weekly, or the monthly that is, we can see that its oscillator and change line was tested last month. That was rejected, so that certainly lines up with what we looked at the 30-year Treasury. So bring it on home to me, Stevie. Well, if we take a look at a 30-minute time frame chart, we already gave you a TD9 count on the 240. The 30-minute time frame chart this morning formed a TD9 count bottom. No, it did that yesterday at 4 o'clock in the afternoon. And now we've got price. If it can close above 102.08, its TD9 count break down resistance level, that would signal a move higher. So there's a review of the 30-year Treasury as well as the charts for the TLT. Dano, I hope that helps you out. If there's another piece of information we're looking for, just let me know, and Stevie will get to it. The next request out here is a take a look at UCO. So UCO is the ETF. I believe UCO is the ETF for light sweet crude. Am I correct on that? Yeah, I think it is just the crude oil. So we're going to go do the same thing here. We're going to start with the underlying instrument because that's where you and I are going to get the best pattern information. So let's see if we can open up those charts here. We can. And now it's popping up on our screen. Let's make sure we're in the right spot. We are. If we take a look at a monthly time frame with regard to light sweet crude, what we know is it's a consolidation with inside its profile. But we also know 86.68, the oscillator change on is a very key level of resistance. Weekly time frame chart, there's an A to B equals CD to the downside. It has not been completed, but we got a consolidation with inside its profile. On the daily time frame for light sweet crude, well, we've got a breakout, I believe. Price is above the top of its profile, so this pullback here is not deafening its message. The top of that profile is 78.03. We're at 78.51 right now. So what this is telling us is that as long as price stays above that 78.03 level, we may be looking at 82.69. On a 30-minute basis, price has pulled back and found support at 78.41. That's its breakout level. Same on the 60-minute time frame chart. Key area for light sweet crude today is going to be 78.41. It's really going to be 77.85. You get it close below that, we're headed to 76.22. Steve Rhodes with TFNN. We'll be right back. We'll go take a look at those UCO charts for Mike K inside the Tiger's Den.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 340, S&P 43, NASDAQ 101. Russell is up 14 points right now. We're taking a look at the charts here for UCO, although we did just take a look at light sweet crude. Basically, these are saying the same type of thing. We can see in the case of UCO, price is back inside its profile. Its price target to the downside. Next area of support between 28.19 and 28.28. You get below that, you can see it move all the way back to 25.62. Weekly chart of consolidation with inside its profile and the same pattern from the monthly standpoint. No strangeness from the standpoint that we have price pulling back. Why is that, Steve-O? What we saw was a 5-day rally out here. When I say a 5-day rally, I mean 5 consecutive closes where each close of the current session is above the prior close out there. That's a rally. So no doubt that it needs to take a breather. That's what we've got going on. We take a look at UCO and price consolidating with inside that daily profile. So I hope that helps you out. That was for Mike K. Thanks so much for taking the time to write in. Let's go take a look at the next request. This is coming from Dan. He wants to take a look at Nordic American Tankers. NAT is the ticker symbol. So what do we have out here for Nordic American Tankers? Well, you've got a good old-fashioned, is this a sell the D point pattern? Let's draw in the A to B level here, and let's just move that over to the C point. So there's A to B. Let's move this over to C. Try to move it over there. It's about right there. Let's see. Yeah, so you've got yesterday confirmed a sell the D point pattern. Why did it confirm it yesterday? Because it completed the 1-to-1 price objective, and we got the bearish reversal candle. That was a 3-river evening star. So we know here, Dano, is we've got a confirmed top. What we also have is price pulling back and testing the bottom of its new profile. That is at 431. That is held. And today we have a test and rejection of that green oscillator and change line, currently at 428. So conditions here are somewhat neutral. Why neutral? Because when you form a top, the only right that you really have is to get back and test support. You never know if support is going to hold or not. But in this case here, it held yesterday. It is holding right now. We'll look at the 30-minute time frame chart and see if there's any other signal out here. On the weekly basis, you've got an even larger A to B equals C to the hopefully you guys have me. Seems like an issue, internet issue. In any event, on the monthly basis, I'll just keep going. If I'm just talking air, well, so be it. If we take a look at the weekly or the monthly time frame chart out there, we are on a TD9 count watch. What that means is that the high of the pattern so far is this month. The bar still needs to complete, so it's early in it, but you could get a TD9 count top on a monthly basis inside of Nordic American Tankers. What we also know is that top can come on the bar following bar number 9. So bring it on home for me, Stevie. Well, first let's go take a look at that 30-minute time frame chart. The 30-minute price right now and its bounces continues to find resistance at its red oscillator unchanged line out there. So that's a level to watch. You know what we should do is try to take a look at, let's try to take a look at its seasonal patterns out here just before we conclude. So this is the TLT, by the way, and I meant to bring this out when there was a request. You can see on the TLT, where we're talking about pretty much a consolidation. If we look at the last 20 years out here, you'd almost have to say that consolidation may stick around for quite a while through when, Stevie? You'd probably have to say through about the middle to end of June before it traditionally would take off to the upside. But let's go take a look at NAT, see if we've got the data on it, see what its typical pattern is, and here we go, Nordic American Tankers. So we've got how many years worth of data? 25 years worth of data. I didn't mean to do that. Just get this over here. Okay, so here's where we're at. So Nordic American Tankers should be heading higher. I mean, that's its seasonal pattern. So it's got a seasonal pattern. It's formed that top that we saw. Prices pulled back to support. So if it's going to continue along with this seasonal pattern, this support level here, Dan, I would think would hold. That's that oscillator change line and bottom of its profile. Now on a 30-minute chart out here, we saw that. We already took a look at the 30-minute chart. So nothing left for me to report on. I take that back. Stevie, be careful. If you take a look at its consecutive days up, consecutive days down, today could be day number 2 in that pullback. And that's your typical knee-jerk reaction time frame. It can be 3 bars, sometimes 4 bars, but it's typically between 2 and 4, but 2 is usually a good cycle, knee-jerk a low to the bottom. So I hope that helps you out, Dano. Thanks so much for the request. Next request coming in from ELO inside the Tiger's Den. ELO wants to take a look at Sarbanes-Oxley. I'm just kidding. He wants to take a look at ticker symbol SBNY. And SBNY, I'm actually going to go ahead and see if I can get that data. Oh, we can. Signature Bank on my historical seasonal charts out here. But right now, when we take a look at Signature Bank out here, what do we see? We see a TD9 count bottom. So that formed on March 23rd. That bottom, that had a volume there of 2.5 million shares. We've been trading for 2 hours. We are already at 343,000 shares. If ever an instrument, Dan, was, this is ELO. If ever an instrument was pulling back on light volume, well, this is it. Now, your problem here is that it's still within inside that swing point. That swing point goes from a low of 104.63 and a high of 109.62. You would need to close above 109.62 today to reject that pattern and suggest at least another rally towards that red oscillator and change line at the 114.15 level. If price closes inside this ELO and you're looking to try to add to an SBNY position, then do it when it tests that low, 104.63, does it on less than 2.5 million shares, and closes back above that level. That would be another buy signal in addition to the already daily TD9 count bottom. On a weekly basis out here, what do we have? Well, we still have a Rhodes Momentum Indicator bottom that remains in effect unless price closes the week below 106.81. We're not trading below that as we speak right now. On a monthly basis, you have a TD9 count bottom. That TD9 count bottom would be negated if price were to close below 129.96. That's more important at the end of, what did I say? I gave you the wrong number. Sorry. 106.81, and that's going to be important at month end. On a 30-minute time frame for SBNY, looks like this has negated its TD9 count bottom. It has. So price should at least target 105.74. If it closed below 105.74, well, then it's at least going to go test the low of that swing point that we took a look at. And again, you'll be looking for a test and rejection. Now let's go take a look at the seasonal charts here for Signature Bank. Let's see how much time we've got here. We've got 18 years worth of data. I need to somehow refresh this whole thing. What did I do there? I didn't. Sorry. There we go. Okay, so now we take a look. Let's go ahead and see where we're at today. So here's where we're at today. In the case of Signature Bank, we've got that TD9 count. It typically forms a bottom right about now, today, tomorrow, the next day out here, and then has a little bit of a rally, and then and that rally kind of turns into a sideways consolidation. Doesn't typically really bottom until the June timeframe, June 18th, which is pretty typical of the stock market in general. Sorry, I don't know why that did that. As far as the month of March is concerned, it's its worst performing month, or it has been its worst performing month for the last 18 years. So pay attention to that daily TD9 count bottom. If that level fails, well, then you know that Signature Bank is just following the seasonal pattern, and that would suggest a much lower price. So I hope that helps you out. ELO, thanks so much for the request. The next request is coming in from Nicholas inside the Tiger's Den. Let's actually read it. That'll probably take us in the break, and we'll get the chart set up here. It says, good morning, Steve. Would you please go over good old SMHs? Thank you. Have a great day. Well, Nicholas, you do the same thing. Let's actually pull up the SMH charts out here. At least just start a tad review in about 15 seconds. Right now, what we can see is price is consolidated. It's back inside its profile. Consolidating between the support level here, Nicholas, of 236.48, and resistance is certainly the oscillator and change line. That's currently printed at 245.56. We come back for this break. We'll finish, take a look at the SMH. And, of course, folks, I would love to hear from you as well. 877-927-6648 or steve@tfnn.com. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. So the Dow's off 350, S&P 43, NASDAQ 196, Russell's off by 12 points out there. Gold is off $32, silver down 41 cents. We're taking a look at the SMHs. This is for Nicholas, who wrote in. And Nicholas, the bigger pattern out here is a sideways consolidation. Now, we've got a sell the D point pattern. That actually formed a couple different times out there, confirmed on February 10th. It confirmed again on February 16th. It confirmed again on the 17th out there. So a good old-fashioned consolidation, which is from basically about the 233 level all the way up to about the 254 area. The weekly chart, the price right now is back inside its daily profile, close below 243.27. I'd really say it closed below 239.88 as we get back to the bottom of at least its profile level, 236.48, and perhaps the bottom of the consolidation. Weekly chart has a confirmed A to B equals CD to the upside. It has not completed that pattern. Price is just consolidating with inside its profiles. That's anywhere between 222 and 256. The real resistance level that it has struggled with has been that green oscillator and change line the last 2 months, and that level right now is at 246.71. A monthly close above that is going to say we run to 280 to 290 out there. Those are the SMHs. Now, on a 30-minute time frame, so how are the SMHs responding today? Well, what we can see here is a beautiful TD9 count bottom formed right at about the TD9 count breakout level of 241.05. Only a close below that is going to suggest lower price, and that's it, is 239.41. So watch 239.41 to the downside. Because we have that valid TD9 count bottom, what price should do in the SMHs is target its oscillator and change line. That would get you back up towards the 243 area out there. So a bottom, very much like we took a look at with regard to the ES Mini and the Russell 2000, I believe, that had TD9 counts for their 30-minute time frame. Gives you a ton of information if the lows hold, and then tells us where price should bounce to up there. So with regard to the SMHs, this is also going to be, or appears that it will be, day number 2 of a consecutive move to the downside. It's not unlike it. And if this doesn't hold out here, when the 2s have failed, well, it's made a 3, it's made a 5, it's made another 5, it's made a 4. So watch today's low would also be helping you because this should be a bottom. So you want to see these support areas hold out here. So that's what I know what we can do. We can take a look at the SMHs. What is their traditional pattern right around now? Is it to find a high? And the answer is it is not. Now, this is the last 22 years worth of trading out here. And typically we see that next bottom form right about now, March 11th. So what, today's the 7th. So let's say next week, with the markets rallying in through the early part of June out here. So that's a typical pattern. March itself is seasonally a decent month for the semis, nowhere near as good as November has been over the last 22 years out there. So that's what we see when we take a look at the SMHs. I hope that helps you out. Nicholas, thanks so much for taking the time to write in, and have a terrific Tuesday. The next question coming in from HD, and that is with regard to rigatoni. RIG is the ticker symbol. Let's see what the question is. Hello, Steve. Would you please look at RIG for a long, please? Absolutely. So we take a look at RIG. We can see right now that price is moving higher into a prior swing point that had a Rhodes Momentum Indicator top. And therefore, if price could close over the high from February 2nd, that high would be 769. It would negate that pattern. It suggests we move higher. So far, that is held. Now, the volume on that candle session was 12.2 million shares. So far today in trading and testing that, we're up with 6.7. So this is moving higher with volume, but has been unable to bust that out. What does that mean? Jelly bean. It means price will get back up there and at least test that level again, HD. And again, that is at the 769 area. Now, if you do get if we're to close right now, we'd have a second bearish reversal candle confirming a Rhodes Momentum Indicator top up at these levels. So that certainly is telling us something. But right now, price needs to close, at least get back inside its profile. To do that, you would have to see it close today below 748. If we get that, that's telling us about a future move lower. Now, it would be signaling to move back to 644 to 603. I'm not sure that's where price would head to, but it could. On a weekly basis, you've got a TD9 count top. Now, the beauty of that is you close above that high. That high is at 769. That's also the top of its profile. That tells you that RIG is getting ready to motor on higher, which is exactly what the monthly time frame charts are signaling to an eye. That longer term, RIG wants to move higher. But in the short term, you're looking for a buy point. So what you're looking for here is you're looking for today for this to confirm that bearish engulfing or whatever bearish reversal candle, a close below the top of that profile. So we took a look at that. And then what we're looking for is probably some type of short-term bottom pattern. And I'd say we'd go take a look at the 30-minute time frame chart, which has a confirmed Rhodes Momentum Indicator top, but has not broken through its first important level of support. That's at 738. If it did break through that, we'd be looking at 704. So I'm suggesting HD that based upon price moving into a prior swing point with volume, says it's trying to break out of that, but until it breaks out, it hasn't broken out. And so therefore, I would be patient. Maybe you can pick RIG up on a retracement. Maybe you could even get back towards the 644 level out there. That would be one possibility. What the heck am I? Nope, I'm not. Did we go over? We didn't. We didn't take a look at RIG to see if it had a seasonal pattern. So let's finish it off by taking a look at that. RIG is the ticker symbol. Let's see if we've got the data for it. Transocean, there we go. So Transocean been trading for, at least I have the data, for 29 years. So in the case of this suggests that we should have seen a top just a few days ago on March the 4th. So with regard to RIG, well, we're seeing, it's traded into that top, maybe forming another top today. And again, it doesn't really head much lower. Now, when it forms that top, it really kind of consolidates along the bottom until about the third week in March. And then it takes off and it forms a high or it has, historically speaking, in the first week of June out there. So that's what the patterns look like for RIG. Look for a long. Look for a pattern on a intraday time period, or possibly get all the way back to that 644 level. But it's suspect whether that will be the outcome. So HD, I hope that helps you out. Thank you for taking the time to write in. That was much appreciated. Just checking the emails here, see if there's any other requests. I don't see anything here. I don't think there's anything inside the Tiger's Den. So let's do this. Let's go take a look at Goldilocks. Goldilocks getting smoked. Let's go see what it is smoking out here. So we'll get to the multi-time frame set of gold charts. I'll populate here momentarily. What I will share with you is gold does have profile support, daily profile support, that is, down to the 1815 level. So it has two areas of support, 1815.50, the bottom of its TD9 count that you'll see, or its TD9, the low of the TD9 count, that is. And at 1815.40 is the bottom of its daily profile. So right now what it's basically doing is just consolidating with inside that daily profile. If in fact price closes below the TD9 count bottom threshold level, and again that low out there was at the 1815.50 level, well then we could be looking at a gigantic A to B equals CD to the downside, because that retracement looks like it's enough of a retracement, pretty close to a 0.382 retracement. And so let's take a look at that. So if the TD9 count gets negated, What that would then set up is an A to B equals CD to the downside. Now, where price would need to close below in order to trigger that is not just negate the TD9 count bottom pattern, it would need to close below 1810.80. If in fact gold does that, we're not saying it's going to, we're saying if it does that, that would give you a 1-to-1 price projection that would take price all the way back to the lows in November. All the way back to the lows in November. So that's what we see with regard to Goldilocks out there. Still watch that key level of support, that 1815.50 and 1815.40 level. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. So we're taking a look at the stock charts here for gold. What we've noticed is that price has basically tested support. The bottom of its profile, the actual low of the day for Goldilocks has been 1820.10, and that 1815 area is the bottom of that daily profile. Now, we look at intraday charts here. You've got a bottom pattern, a TD9 count pattern that is likely going to form on the 4-hour chart. Is going to form on the hourly chart out there, and you've got a buy the D point on the 30-minute time frame. So we've got the signals for at least a short-term relief rally. Where would be the price target to the upside? I'd be looking at the 1831 area. 1831 is the 30-minute oscillator unchanged line. That would be the first level of resistance on any bounce to the upside. We also took a look at gold moving to the downside. So right now as we speak, and I do have a 10-minute delay, I have the U.S. dollar index trading out at 105.33. And at 105.32, that's the top of that TD9 count threshold level. If it closes, the U.S. dollar that is, above 105.32 today, well, one, that's going to negate that signal, and it's going to set up an A to B equals CD to the upside, or maybe there's a larger A to B equals CD to the upside that's already underway out there. So watch 105.32. If gold bust through the support area on the daily time frame, well, from a seasonal perspective, it would not be unusual. What do you mean, Steve-O? Well, if we take a look at the last 54 years worth of data for Goldilocks, we can see that we get a top that forms in the end of February, third week of February out there, and then price moves lower. And in fact, it moves lower at least into the this is the 7th, so for about another 10 days or so. Then we get a rally, and then gold typically doesn't really bottom until July. Now, this is the 54-year cycle. We're taking a look at March. If you look at gold for the month of March, it is the worst performing month of the year out there. So the cool thing about that is we already have the parameters, meaning on the daily time frame for gold, we have a TD9 count bottom. And so, again, if price closes below that level, then that's going to tell us what gold is doing. And, folks, we know that it would just be following along the seasonal pattern. So watch that U.S. dollar index, 105.32. Watch all the other numbers that I gave to you. But most importantly, have a terrific Tuesday, and I'll look forward to seeing you on Wonderful Wednesday. Thanks for joining us. Take care, folks.